Kirk Duckwall, the House Geek, here with Mastermind the Market, your real estate stats update for the Twin Cities area. Well, it's been a little while since I've done one of these videos, so hopefully everybody had a great holiday season, but we are moving now into the spring market season. But how are these rates affecting the spring market so far? We'll dive into that in just a second. But first, I wanted to point out an upcoming class that we have, Hack Home Buying. So this class is not just for first-time buyers, second-time buyers, but investors too. Here we're going to be covering where, when, and how to find the best deals in the Twin Cities. Also, the mortgage shopping formula to get the best rate. Couple of new things though, we're going to be discussing how to understand disclosures and inspections and negotiating on those as well, and also the basics of house hacking for those looking to start their real estate portfolio. So I'm going to throw a link in the video as well as in the description. Complimentary tickets. Come check out this class. It's going to be in the private room at Devani's in Richfield, January 29th at 6:30 p.m. It's an hour-and-a-half class. Again, get your free tickets by clicking up there. All right, let's dive into the data and take a look at what's going on in the Twin Cities marketplace. Okay, starting off with interest rates. Well, interest rates, we follow the bond market, and the bond market has not been doing good. So we kind of bottomed out here after some upward movement around December 6th. We saw things recovering, but then it flipped back again, moving up to where we are today. So how has the bond market affected the interest rates? Yeah, so we were starting to move back down 6.75-ish range, and now back above, just above 7.25. This has affected the application rate. We've seen now mortgage applications down 4 weeks running in comparison to last year. So what's happening in the real estate market? We can see new listings down a little bit over last year, 875 and now down to 710. Pending sales dropped off as well, 474 down to 426. Looking at the showings per week per listing average, 250 to 500K price range. Now that we are seeing up. So that is a positive sign that's out there. 3.93 up to 4.15. And then week over week, big jump, 3.28 to that 4.15. So that's tracking ahead last year by 6%. Total showings, though, running real close. 2140 is where we were last year, 2209. So that is up by 3%. So where do we stand? Flipping over to Home Free TC stats from December 27th to January 10th, all accepted offers. Inspections waived, they're seeing 23% of the time. Cash deals 14%, conventional transactions 72%, FHA buyers 9%, and VA at 3%. We're seeing the average sale price just below list at 98.2 for the average and 98.6 for the median. Keep in mind that's not factoring in the closing costs and how that's affecting that net 35% of the time. Sellers are contributing towards buyers' closing costs. A couple other notable points: contingent on sale of home, 12%. Escalation clauses, pretty rare right now, only 2% of the time. And appraisal gaps, 5%, and cancellation rate pretty low at 5% of the time. So what does this all mean? Well, we're seeing the market moving up, even with the rates being a bit higher. We have inventory that's either at or slightly below now with the most recent numbers that I'm looking at. And then with that, a higher showing activity. So in comparison to last year, we were at a 4.61 on the market meter, and now we're at a 5.08. So we're outpacing last year. if the number of buyers continues to outpace last year, this is going to be a stronger spring market, even with those higher rates for for sellers out there. For buyers, we are seeing that again. It is stronger, so there is more competition, and don't be surprised if we actually see more cash buyers injecting themselves into the marketplace. So even with higher rates, this still is a competitive time of year, and for sellers, you really want to be. This is your time to shine. Even with the rates being a little higher, you want to be getting your home ready and preferably on the market by no later than mid-February to mid-March to really maximize, because this is where we see that 30K and 30-day spread in price as the activity levels jump in January. I mean, we just look at last year where we had a 4.1, so basically bottom of stable market, and ended January all the way into seller's market territory. So yeah, you really want to be prepping your home. This is the time to reach out to your agent, be having those conversations. For buyers, this is where you want to start building your patience level. Start maybe if a house is looking really hot, you know, it shined up, it's got all the pretty pictures, waiting to see if it's still around on a Monday. Maybe waiting to see if it goes into multiple offers before making a knee-jerk reaction there. So hopefully you found this information valuable. Again, come check out that free class, Hack Home Buying, if you haven't had an opportunity to yet. We'd love to see you there. And if you like this video, make sure you click on that like and subscribe as well. Take care and have a great week.